everyone. I'm the Chuck in the Markets Up Chuck, and today is the final Series 3 of our series on growth and income. And I'm going to start today with H.J. Heinz because I want to make a point. H.J. Heinz is the slowest grower that I've really shown in this whole series. Its average growth is about 3.5%, but it does have the highest yield. And the reason I want to show that is if you're always making a trade-off. If you want to get the higher yield that many stocks offer, you often are giving up growth potential. So in the case of Heinz, we only have about a 3 to 5% growth rate, but we do have a higher dividend income. So, you could sprinkle this into a more growthy growth and income portfolio so you could ratchet the yield up a little bit because this is actually paying more than a 10-year Treasury bond is today. My second example then would be Vanity Fair, which is, or VF Corporation, excuse me, which is known for their Wrangler and Lee jeans. And I want you to notice this company normally is traded at around 12.8 times earnings, which is that blue line. It's been a 9% grower. You can currently get a 3.6% dividend yield on the stock. But I will also argue that it's trading about, where it normally trades. It's trading at around a 13 multiple, so it's not a bargain, but it has a good dividend yield, a nice, historical growth rate of over 9%. And by the way, it's forecast to grow at 11. So this could be an excellent choice. As you can see, in the long run, it's outperformed the S&P, almost by double, not quite, but almost by double. But when you add dividend income in, the dividend growth has been, really excellent in this company. So Vanity Fair could be, or VF Corporation could be a great opportunity for a growth and income portfolio. And the next example I want to show today is Kellogg. And Kellogg is another company. It's got almost a 3% dividend yield. It's been about a 6% grower, clearly a blue chip, with the Kellogg shares. But I did want you to notice that this stock is really historically always traded at a much higher valuation than it's currently trading at. And you can see that the stock price has begun to recover. But, these stocks, as I mentioned in the written part of my blog, haven't really kept up with the general market, and yet they're still available. So for, ironically, to me, if you're looking for good growth and income and want to get something that is reasonably safe, these blue chip stocks with these yields are certainly a place you ought to look. And then finally, I want to look at Hershey's, yielding over 3%, has a historical growth rate of 7.5%. The forecast growth rate is consistent with that at about 7. You can see their track record has been, better than the S&P, but with a nice, record of increase in dividend. They did have one dividend cut in 2005. But, these companies are all pretty well capitalized. They have good dividends and good dividend records and would be good things to look at. This is Friday, and, of course, we got a long weekend, a 3-day weekend. We won't be blogging on Monday. We'll be probably coming back on Tuesday. So you all have a great long weekend. It's Chuck Carnevale saying thanks for listening. Hope you enjoyed this series on growth and income. As always, do your homework. These are just a starting point, but these are some, we've offered 12 examples here that you could actually build a growth and income portfolio on, in our opinion, and yet, they're all blue chip, well-known names. So, look for, what the market's really giving you. Right now, we think there's a lot of opportunity if you're willing to take the time to look. This is Chuck Carnevale saying thanks for listening.